Hi, just another update on ZA stocks just to see what he's been tweeting about this weekend. I've got a couple of groupings. This is the first group that I'm going to do a short video on, and I'm looking at DigitalOcean. DigitalOcean, I suppose, are an NFT, or don't even know what they do. These are all engages in providing cloud infrastructure. Oh, well, there you go. So they actually do something. We've got open, high, low, closed data from 2021, and recently I think I've got a bit more optional data. Anyway, so let's have a look. So we've had a couple of periods of illiquidity. One here. There was, to start with, some reactional illiquidity. Then we've had bit of buying of the underlying, I expect, and then we've had a sharp dip after this earnings. I don't know, this earnings doesn't look that bad anyway. We had a sharp dip and it's charged it back up, and it's slowly crept back up. Looking at the data, it doesn't look amazing to me. If I just quickly looked across, put a line on it here, it looks to have about the same. It looks to have about the same liquidity at about the same price level. So to me, that would suggest that it's not a hypercharged stock. Yeah, it's been going well recently. It's had a little bit of a charge going in here. Instead of having a close look at it, let's just go and have a look at it in the go and see what its status is in Naked Delta. So in Naked Delta here, we can see that it's had, after that big sharp dip that we had a look at, it's had a very strong DPI there. This DPI here is probably just, there's a bit of dip buying here. This is probably just hedging by by dealers, option dealers. Here's another bit of hedging here. This looks like there's been some good buying through this dip here. Interestingly, if we look at this slanting gamma here, positions haven't closed during this, so this has just been hedged and the gamma's gone down with the hedging. So it is, people might think that's a usual thing, but it's quite tight, it's quite large. Like, no one's left their positions. It's really quite high. Usually you just see things peter down like this, but we've got high gamma and it's come back down. Much more likely to look like that. Anyway, just interesting. I just like silly charts. Here we go. There's a bit more DPI here, buying in the bottom, and it looks quite strong. It looks stronger than it did in the liquidity chart. It's had a good ND buy signal here, good buy signal using our little formula for buying. There was another strong one here, and here the buy signal didn't actually happen until after this dip. There hasn't been a buy signal before. These couple of dips here, not bought so hard, and when we saw this gamma pulling back, there was no buying signal coming in. There was no extra people popping into this market. Tiny little bit of one here, but then it's just really been flat till now. Now we've got some new players coming into the market, so maybe it'll tighten up. One to watch. Alright, the next one that ZA had on his list is, let me just go back to this screen, is Confluent Incorporated Technology Services. They've paid dividends. What do? They do data infrastructure platforms. Alright, so they do something as well, which is good to see. Here we go, and they are looking tighter. So if we put across at the same price level, if we put a line in there, we can see they are a lot tighter. So they look like they're a lot more charged, and it's probably got to do with this period of buying here. We can see some reactional liquidity here. They've been listed reasonably recently, or come off some warrants setting them up out of private equity. A little bit of a build here, another good tightening section, here. So they are looking stronger in their current stuff. If we have a look in the does look like it weakened a bit on Friday, but I think everything did into the afternoon. It was a good stronger bit during the day. They are just trending up, becoming a little bit looser. Just waiting here on the earnings, I would say. just the pattern looks like a little bit looser, and also we've got a little bit topping in the DPI here, topping in the liquidity here, staying in the higher range. Doesn't look so good for earnings to me. That's my guess on that. Was there anything else hiding in this data? No, it was bought well going in. It just hasn't done so well. Oh, I'm looking at the wrong piece there. Don't you? Doesn't that annoy you? See, FLT. Sunday night in Australia. One beer in. bad mapping skills. So, yeah, look, this has had quite a good buy here, but we can see that there isn't a buy signal in it. It's quite weak. So there was quite good buying through this dip, but it's reasonably weak buying. I really have to get close to try and get to see that buy signal compared to the last dip. The last few dips we've seen much better buying popping up, good little sections of it. Maybe it's better than I think. It's up here in the it's in the high 60s. It's pretty good DPI. Not up here in this sort of 70 stuff. This 70 stuff here, I would have thought that's a bigger market maker. So this here is it. It's a nice thing to see in DPI. You don't see it that regularly, but this is a bigger market maker. Someone like Citadel buying from a smaller market maker, so they're providing liquidity for a smaller market maker. So we get rising DPI after the top. We get this distribution. So the selling of the underlying. It's very interesting to see that. You don't often see that after a topping period. You know, this one here has gone straight into more buying of the underlying. People just taking the opportunity to buy it. Again here, going into a buying. But it just doesn't have that strong right after the peak. Maybe people thought it was going to push on and then it broke away. Doesn't seem to be any active traders here in the puts. This is in the shorter dated stuff. This could be just the hedging rolling in. Yeah, maybe this is just blocked in hedging that's coming in for the earnings season. Good looking, but it's definitely tighter than the last one we were looking at. So the next one's Sentinel 1. Let's just have a quick look at what they had on the bigger data. So here on the daily, we've had these sharp bits here, reactionary liquidity going to the bottom. Then we've had one reactionary bit, but then we've had some really strong buying here through this period here, which has sort of continued probably right through till about September. It's continued buying, and then after that dip we've had this is reactional liquidity, then we've had a little bit more buying, and this gradient here looks pretty slack actually. Looks pretty slack, but it's as tight as $8 below, so it is reasonably tight. It's had a reasonably good build. Let's just have a quick look in it here in the ND data. In the ND data, it's had quite a good buy there, but yeah, that DPI is not very strong compared to this sort of dip here. It was very strong. Something's happened here and put people off, and it's a bit saggy now. No real gamma's come back in. No one's really buying. The gamma's just rising at the same rate that you would expect with a rising price there. There's no wild buying in the bottom. This is pretty good. Something happened at the last earnings that people don't like. Don't know what that'll be. We can look previously. It's had some really good buys, and that was where we saw the most of the liquidity tightening in this stock, making it tighter than its last cycle. Alright, we've got one more stock to do in this little batch, and this is a GME stock as far as I'm concerned. That's my take on it. I follow the uranium market and reactor market for a while, and I think it's the thorium market for small reactors is a dead market. They're just not viable on small scale. Reactors are really only viable, as far as I can see, where the military or government's organised and they're just throwing money at it. And I just can't see that competing with the other side of the market, which is the renewable side. And at the end of the day, it'll get shaken out whether people like it environmentally or not. I think that oil will survive, and I think that a lot of the renewables will survive. Don't know if there's the real money going into these. This just maybe something I'm wrong, but a whole lot went broke in the last cycle, and I expect this one will fall on its head soon. But at the moment, they're really enjoying their company is now worth $6.78 billion, and they haven't made anything. Very GME to me. At least GME has shops and real estate. Anyway, we can see here it's had an interesting time where it's had some wonderful builds as it was turning into the new GME stock. Can we see that in price discovery? Oh, no, we can't. It's even hard to see in the price discovery. Here we go. Here's these gaming of the build. It's only been optionable. Well, no, it has been optionable for a while. Has it? Oh, no, I think this has only been optional for a short while. So it's just been played using its... it's only been optionable since May 2024. But it's a fun stock, and it's been traded fun, and I suppose it's half the game. This is a really good build here. We've had another one just before this, and this has held its strength. And if we look at where that liquidity is relatively, that liquidity is holding, the liquidity is holding from a price at 8 and it's now at 55, so it's tight and it's going to keep on going. It's a parabolic, and at some stage it's going to burst, but it's going to be fun while it's getting there. And that's probably why we're not seeing much movement in the likes of GME, because this is where the game is. There's a couple of these, but this is definitely one of them at the moment. Selling the story, the narrative, and not about the taste of the dinner when it gets there. Anyway, I hope you enjoyed that short video, and you have a wonderful Sunday, and we'll see you for some early or some late Sunday night videos. We've got one more to do for ZA stocks. Thank you.